This is the continuation of my opening price series. And in this video, I want to show you how you can identify two candlestick formation to profit from the market week in, week out. And you have to follow this simple instruction that I'm about to share with you. At the end of this video, I'm going to show you trade examples that we've taken within the community, and then how you can improve your trade by simply backtesting these ideas on your free time. So without wasting time, the continuation opening price are simply the opening price that continues the previous candlestick movement. Like this first one here is a bearish continuation opening price. In this case, that level stands as resistance. So what you need to do is to identify two bearish candles consecutively. You mark out the closing price here and the opening price. They have to align. You draw them out. If they do not align, you take your line back to the closing price. What I'm saying is, in a situation where price is like this, maybe there's a jump, a gap. Let me change this to red. Change this to red. Obviously, we have wicks here. Yeah? Probably the wicks went up. Okay, so when you have a situation like this is an exemption here. When this happened, what it means is that originally the opening price was supposed to start immediately the closing price stops, but because of some situation manipulations in the market, weekend breaks and the rest, price jumped to this opening price here is a false opening price. It doesn't show the true picture of what the equilibrium of the market is telling us. So what you need to do is you come here to the closing and draw out the line. This line here is the opening price, original opening price. So this is the line we are looking at and not this. All right, so you don't have to be confused. If you use this, it does not give you the true picture. This is a false price, because when market closes, it has to open the same time or the same price level as at when it closes. So the closing price and the opening price are the same. All right, when they are not the same, you revert back to the closing price. So how do you make trading decisions around the bearish setup? Now, the level here is considered a resistance, or you call it a supply level. Remember, this looks like the hidden base. All right, the hidden base. If you have an hidden base, you mark it like this with the 2 weeks. You mark out the 2 weeks, and then that's your hidden base. So this is not something new, just that I find a way to bring my levels to a single price, because market respect a single price. If price is going off, it's as a result of a price. All right, now there might be plus or minus that standard deviation above that price, but the key thing is that price. So I'm going to show you on the chart what they are, so stay with me. So instead of marking the wick here and the wick here as the hidden base, you simply mark out this line here. Now, what do you do with this line? If the market is bearish, because there are ways you understand that market is bearish, simply using these levels as well. If the market is bearish and you want to continue that bearish movement, that's where the reversal opening price comes in. I mean, the continuation opening price comes in. So when we trade back into this level, we want to see a rejection. All right, when market rejects, that means the market wants to go down. Now, what I do is when price come in here, I formulate my trade ideas, my trade in looking for a sell trade. All right, when price trades in here, is either I take it, sell at once here, or I wait for a kind of confirmation depending on market sentiment around that time when price is approaching here. So when price approaches here, I'll be looking for a trade to the downside. Now, what happens if we have a close above it? If we have a close above it, 50% of the time, what it tells us is that the market wants to go higher. Simple as that, to the next continuation opening price. So all you need is closure and rejection. A closure above signifies we want to push higher. A rejection signifies we want to push lower, but with some probability levels. And these probability levels increases depending on the overall direction of the market. We have on this side here the bullish continuation opening price. We have two bullish candles. And then price, what you need to do is to mark out the opening price level, which is your support or your demand level. All right. Support or your demand level. And what do? You simply wait for price to trade back in to establish a bullish bias to continue going higher. And if price closes below it, if you have a close below it, like that, if you have a close below it, that simply means price wants to continue to the downside or to the next opening price. So that is that. It doesn't have to be complicated. So we are going to go to the chart and see how these levels plays out on the chart. And then I'm going to give you a trade example. So let's look at US 30 on the weekly time frame and then look how this area holds up. So as you can see, we are pushing up. Market did not come back to this area because the continuation opening price. Sometimes the market move with strong momentum, but in this case, this movement has already established a bullish bias. So all you need to do is to enter the trade. How I use this is that if I miss the entry from here, or I'm already in the trade here and I want to add more to it, I use the continuation opening price to add up to those trades. So there was no opportunity for me to add to it because market did not come back to it. But if I look at the left here, we have one level here. Let me use my magnet tool. We have a level here. You can see that level at first serves as a resistance when low until it breaks above. The moment this breaks above, that resistance becomes support. This is a movement as well. So this could be your entry here, regardless the time frame here. Okay, I'm just looking at the weekly so that I don't go through many datas. So when price push higher, another place where we saw another entry for the continuation opening price or another bullish idea to come in was at this level and even at this level, though it went back to this and then price rejected, push higher. We came back again. We came back again to this price touch. You can see how sharp the entries are or the rejection are at that level. And this is a reversal opening price here. Price push up. And then we came all the way down. Where are we rejecting from? That rejected, formulated a new one here, push higher. We have this rejection here. We close below. Now, because we close, we need a confirmation from the next candle rejection, but the next candle closed above. So we continue pushing higher. All right. Yeah, rejection, close below. We wanted to go lower, and we did. Tap into this reversal, push back up. All right. Price push up. You can see all of these are areas where this is a weekly candle. Remember, there are many pips movement that could have given you as an entry. So currently, in recent time, I was monitoring these levels, but price did not get there for me. All right. And as a patient trader, I do not need to start jumping in. All right. If the market is bullish, at a point, it will come back to the opening price. And that is where patience come in as a trader. So let's take a look at, I sent out a free analysis on AUD USD for a bearish trade. But before then, what I was saying is this: we have the market bearish. And as that, when I put up the trade, I was expecting the price to come here. I have different levels though. We're expecting price to come in here. This is what I sent out, but the people I sent it out to did not get this entry. All right, but however, this was where the market rejected from. I wanted a deeper push in, but market did not come in deep here. Instead, it rejected from here and started moving to the downside. So sometimes we have to frame our bearish setup when price comes into these levels. I prefer here so that once you pick a trade here or even at the reverse opening price, you have that confidence to hold the trade longer, and it gives you a more winning trades than at this level, because this level we might be close to the next support here. All right, so this is how you tend to use the continuation opening price to your advantage. All you need to do is to practice. If you are not within the Raba Nation community, there's a link in the description for you to join and get a free mini course. That mini course will break down a lot of things that you are facing, and at the end of it all, it will increase your level of understanding on how the market actually moves. All right, so let me know your thoughts, your opinion on what I just shared with you in the comment section. I'll see you in this video.